Hello, fellow traders, mom traders. Today, my goal is to make Elliot Wave simple so anyone can understand. And it's simply this. Think about it this way. The market moves like breathing, in and out, expansion and contraction. But here's what most people miss. It's breathing at every scale all at once. And once you see it that way, everything begins to make sense. And it's really going to make sense once you start applying it. I think that's the best way to learn, but you got to get the information first. So before we look at the chart, I quickly just want to say, why does the market move in waves at all? Why should I believe that it does this? And it's simply because the market is not just a machine. It's not just the algos. It's not just those computer algorithms. It's also people. And people don't all act at the same time. They act in stages. Early participants see something, right? So your early participants are over here in wave 1. They see the opportunity first. They act quietly, and the price starts to move. In the wave 2, it's like, whoa, these are some people piling in, but then the move is questioned. They're like, hey, that was a little too fast. People sell, right? The market is testing whether that early conviction was correct. And then data 3 is when you have the confirming participants pile in when the data validates it. It's the highest point of conviction. The story spreads. It is the strongest move when institutions step in with serious capital, and it is because participation is most aligned here. Most people agree at the same time than at any other point in the cycle. Wave 4, you have some uncertainty, participation fragments. Some take profits, some hesitate, some enter late. There's no consensus, so you get this choppy, messy, sideways price action that we've been seeing lately. And this is where people wrongly assume the trend is over. It usually isn't. It can be, but it usually isn't. It's just conflicting behavior temporarily showing momentum. And then wave 5 is your euphoria, that final push to new highs. And the last group rushes in, the latest and least informed buyers, while the stronger participants are quietly exiting. They have been exiting probably all along this wave. The price still moves, but the internal strength is weakening, and this is participation without conviction. And then the cycle flips, right? So the buyers get exhausted, the sellers step in, and you get this ABC pattern typically. So wave A is that shock down, B is some false hope, sometimes called the bear trap. Hey, it's going back up. Just kidding. And then it slides down to wave C, right? That's that capitulation. So eventually the last holders, the people who bought in wave 5, they give up in wave C, emotionally and financially unsustainable, and they finally sell. And that moment of maximum pain is typically where the best opportunities lie. So here's a concept that makes everything click. Most Elliott Wave explanations skip this, but the same behavior repeats at every scale. A move on a 5-minute chart is the same psychology as a move on a weekly chart. Only the participants change, not the structure. So the market does this at every scale. A wave on a daily chart is just one small pattern inside a bigger wave on a weekly chart. Zoom out, same pattern. Zoom in, same pattern. That's what makes this powerful. So think of it like a map. You have the continent, the country, the city, and the street, right? Same geography, different scale. Markets work exactly the same way. So you have a minor degree, you have your short-term traders, the daily and hourly moves. The intermediate degree, you have your swing participants, weekly moves inside the bigger cycle. And then the primary degree is the institutional flows, the big cycle that lasts months to years. So when I say we are in wave 4, you need to ask at what degree, because you might be looking at a small correction on a smaller chart inside a massive trend on a weekly chart. That is itself just one wave inside a multi-year super cycle. That's why Elliott Wave feels confusing at first. You could be looking at a minor degree move and thinking it's the big picture. So the fix is simple. Always start with the biggest time frame available. So I always pull up FinViz and I look at the yearly, the 5-year, then I look at the monthly, and the weekly and the daily on TradingView. The big picture gives you the direction, And the small picture gives you timing. You're not just looking at the waves, you're looking at layers of human participation stacked across time. And there is not consensus amongst Elliott Wave traders where we are on the grand supercycle. So some Elliott Wave traders think that we just finished wave 1, and this wave 1 was 120.76, and that we're in a wave 2 correction. I think it's more likely that we finished wave 3 because, wow, that was a really strong wave up that got attention. So that's the reason why I think we're in wave 3. We just finished wave 3 at 120, are in a wave 4 correction. And then wave 5 would be when I would be targeting higher than 120, probably 130 to 150 before the next correction. And I could be wrong, like maybe this correction is going to be minor. Maybe this is a wave 4 correction, and then we'll have another blow up top. But I personally would be really happy with that 150 profit. And then the smaller time frame, you could say that you just finished a wave 5 within a more internal degree structure, and we're getting ready to start. We're going to have our waves down, and then we'll be getting ready to start a wave 1 once this correction completes and start a new mini 5-wave pattern as well. So there's different time frames that you can use to apply this Elliott wave. So this is where I think we are, is wave 4, but some Elliott wave analysts think that we are in wave 2. Either way, we're about to go up, right? So whether we just have some disagreement about how, people who think we're going to 200 think we're in wave 2, and people who think we're going to 150 maybe think we're in wave 4. All right, so these are the levels that I'm watching, right? So because we are likely in this wave C zone over here, we did our A, B correction, and now we're in the part C. We're in the range. 65 to 85 is the chop zone. It's messy and everybody's in disagreement. It's sideways. There's no decision, right? Nobody knows for certain what's going to happen next. I think there is a higher probability that we will go lower, but I could be wrong. So I have taken 50% of my positions in this chop zone, just in case it turns into the bullish, right? And you just have to be willing to take that risk. So in a bullish scenario, first we would have to break above 92.46, and then we could be completing wave 5. We could also be in wave C, which I think is the higher probability, and that's where we go to 45 to 58. 58 is the first key support. I actually think we'll be closer to this range, but it could go to $45. We need to stay above 37.68, right? Because we can't go below that wave 1. That would be our invalidation zone. Where did I get this number? It's the Fibonacci retracement tool that you can find on FinViz, where you have this wave, right? And so most people are freaking out. Silver went from 120 to 65. I guess that's reason to panic, but I'm not panicking. I sold my silver position like around 110, so I was pretty well positioned there, and I've been adding right here to my USAS, Hecla mining, and a little bit in silver, because we are in the final capitulation. Whether it goes this way or this way, I don't know, but I have started my position, right? So the red path is the bearish, the green path is the indecision, and the green path is the bullish. So there's 3 paths. There's not 50 paths. And your job is not to predict which one. Your job is to define your levels, determine your risk management, and watch what happens at those levels, and react when participation shifts in a clear direction. So here's a practical process for finding the waves yourself on any chart. First, find the biggest, fastest move on the chart. That's almost certainly your wave 3. That's why I think this is a wave 3. It's clearly the biggest, fastest move on the chart. Step 2, look left of that move. There should be a smaller move up before it. That's wave 1, from 11 to 30. Between wave 1 and wave 3, there should be a pullback. That's wave 2. Check rule 1. Did wave 2 go below wave 1? If wave 2 goes below wave 1, the count gets invalidated and you have to recount and start over. Step 3, look right of wave 3. It should be messy, choppy, sideways, which is what I see right now. That's why I think we're more likely in a wave 4, because I think it's messier and choppier than a wave 2 would be. And then check rule 3. Did wave 4 enter wave 1's price territory? Because if it did, then, right here's that price territory. Then you would have to recount. It would be invalidated. That's a zone you don't want to see. Step 4, look for one more push after wave 4. That's wave 5. Check rule 2. Is wave 3 still the longest? So when we get to wave 5, if wave 5 becomes longer than wave 3, that means wave 5 is actually wave 3. You see what I'm saying? So I can't really tell you until the future happens. So as of now, I think we're in wave 3. It's because so far it's the longest and strongest move that I see. And then step 5, zoom in on any correction you see. Does it have 3 parts? Right now we do have 3 parts. A, you have your drop. B, you have your bounce, and then you have your second bounce. That's your ABC. You're not trying to be perfect. You are trying to recognize strength versus weakness, agreement versus disagreement. It's just like people in the market coming to a consensus. Expansion versus hesitation, structure versus noise, big move, pullback, strongest move, messy pause, and then hopefully we get that final push. That's your 5. Drop, bounce, drop again. That's your ABC. That's it. So stop asking what will the market do and start asking what behavior is the market currently expressing, because behavior leads and price follows. Professionals don't guess. They observe the structure, they define their levels, they wait, and then they react. If participation shifts higher, follow the green path. If participation rolls over, follow the red path. If disagreement continues, stay patient and keep building. Once the market chooses a direction, the next move is usually fast and obvious. And once you see this pattern, you cannot unsee it. So right now we're in the quiet zone, the little quiet phase for silver, the correction, the uncomfortable part, the phase that kind of feels like nothing is happening, bull trap, bear trap, all at the same time. But this is a good place to build a position, because when participation realigns, when, the next leg up starts to happen, it should be pretty fast. It will be obvious. It will not wait for anyone who wasn't ready, positioned. Just remember, wave 3 is always the longest and the strongest, and that's where the most money is made. But you can also make a good amount of money from wave 4 to wave 5. And my target in this is 130 to 150. So I'm buying the quiet right now, so I'm ready for the loud. In my next video, I'm going to talk about how I pair Elliot Wave with some macro global liquidity to determine my conviction. Until then, don't predict, observe behavior, react, and follow the structure.